What's going on, my fellow fans of the stock market? How are you doing this lovely Friday evening? Welcome to another episode of Technically Options. If you are new, quick intro. My name is Brad. Thank you so much for tuning in. We meet every Friday night. I sound like my volume is low. Hold on a second. We meet every Friday night here live on the Benzinga YouTube channel just to kind of get together, discuss options. And we've been working through the last couple of weeks. We've been talking a lot about how to trade with like an unusual volume alert service, or what we've really been talking a lot about lately is how to trade the options flow. If you're not familiar with what the options flow is, basically it's just a view of like the level 2 data. I'm sure you're familiar with that term, but it's for the options market. So it shows all of the option orders that are coming through. It tells you the premiums, it tells you the size, tells you, what side they're on, things like that. And then basically what we do with that information is we use it as a part of our strategy to enter. Sometimes we just completely ignore the signals and things like that. But our goal is to use the flow in a manner that helps us to trade more effectively. So we've been talking about that for the last couple of weeks. We'll continue to do that too. But one of the things that we're going to start tonight, I get asked a lot of questions throughout the week in between shows about Greeks. Okay. And if you're not familiar with Greeks, I'll caution you. It's not going to be a real like in-depth study of what the Greeks are. We've done that on some older episodes. What I kind of want to do with the Greeks tonight is I want to explain. People always ask me, hey, this number is this, or should I focus on that? What I kind of want to do is I want to see how we can use the Greeks in a way that helps our trading, and not necessarily as something that we're getting so consumed with. Well, we got to make sure the theta is this number. We got to make sure the delta is this number. We got to do this. We got to do that. Because really, they can become overwhelming. And a lot of the information with the Greeks, it's like, it's I don't want to say it's not going to matter, but part of it is it's not going to matter. A lot of people will ask me, for example, on theta. Okay, so theta is the measurement of how your option decays, like how quickly the price of the contract goes down. Okay. And so with theta, you need to be, especially on a Friday. Okay. You need to be aware of what your theta is, because let's say, for example, if you held calls through this weekend, first off, I don't recommend doing that. I don't recommend holding any position option wise through a holiday weekend that expires the following week. I don't recommend doing that. There's a bunch of reasons, but in the specific topic of what we're talking about right now, is we have to focus on that contract. Now it's Tuesday that we get to open back up the market. And so on Tuesday, the theta has had a opportunity to sort of decay the contract price. And so naturally that's going to happen. Then what we have to factor in is, okay, did the stock go up enough to offset that theta decay? And you can get into calculations and stuff like that. I don't want to do anything like that. I just want us to know like what to pay attention to. Okay. And more importantly, like I said a couple of moments ago, I want us to be aware of like what we can use with the Greeks in order to improve our success as options traders. Like, what do we really need to focus on? So for example, with my trading, I am primarily focused on the delta. Okay. Delta is basically the contract is being assigned a delta number. And this number represents how much the contract should move for every dollar that the underlying asset goes, supposedly. Now, it's not always exact because, again, you have other factors, that are weighing in on your option price. However, it should give you a pretty good idea, okay? And so when I'm trading options, I am primarily buying and selling, okay? I'm not writing calls and doing crazy strategies and stuff like that. I'm not exercising contracts for shares. I am literally just flipping contracts back and forth for premium. So my main target is to focus on delta. I want to increase my delta as much as I possibly can, because the more delta you have, the quicker and the bigger of a capture of your profits you can get without having to hold for days or weeks or whatever it is. Because I'm primarily a day trader of options. I'm primarily even quicker than that. I'm scalping contracts. Sometimes I'm in and out of a contract in 5 minutes or whatever the trade sets up as. So on a trade like that, especially, I am looking for as high of a delta as I can. So that's the main Greek that I look at when I am trading options. Again, I'm not primarily, Theta, you need to be aware of it. I don't think you necessarily have to, kind of hear what I'm trying to say here. Like, you need to pay attention to the Theta, obviously, but don't get yourself so wrapped up in trying to figure out to the exact penny, like, okay, my Theta is this is the premium price, I have 14 days, and try to do all this math and stuff like that just to arrive at somewhere that you can get an estimate on what your contract might be at. Now, if that's the type of trader you are, that's fantastic. I know a lot of people really like to know. There is software that's available that will help you to sort of determine if a stock goes to this point by this date, here's what your contract should be at. If you want to see that, there's platforms available that will help you with that. Primarily, I'm not focused in on that. I have a general idea of when I am entering the trade. I have a general idea of, is this a scalp, is this a day trade, or is this like a swing? And with a swing, I'm primarily focused on at least 20 days out for my expiration. And so with a 20-day and longer, Theta isn't really that important. Again, you need to be aware of it. But with Theta, the closer you are to expiration, the faster your contract decays. Okay. So that's kind of get you an understanding of what the Greeks are and stuff like that. But one of the things that we always do when we first start out the show, also, if you are new, let me just let you know, feel free to drop a ticker in the chat. We like to look at charts. We like to look at options and things like that. So if there's something from this past week that you wanted to talk about, feel free to drop the ticker in the chat. I will do my best to get to it. If I don't get to it right away, I try to work back into the chat, answer questions. You can also save it towards the end, and I will get to it as well. Also, real quick, let me just drop the website in here. So if you guys are if you're not able to get a question answered, okay, I have a website where all my social media, my YouTube page, Discord, things like that, you can connect with me, and you can send me a message throughout the week, or if you want to touch base about something else, please feel free to do so. I'm available to help you guys out. My goal as a trader is, obviously, is to support my family and provide a living. But my goal as a trader is to help other traders succeed and sort of get it. And so I really enjoy teaching, and I really enjoy mentoring. And feel free to look me up on my website. It's tradinggrounds.live. All of my social media links are on there. You can connect with me, send me a message. We'll chat. And I've made a lot of good friends through the show. I have a lot of people that I'm working with right now. And I'd love to help you out with any questions that you have. Don't ever feel like you're going to be asking a dumb question. Please, I would rather you ask the question instead of just being afraid of, I'm not going to, listen, you could ask. We were all new traders at one point. So feel free to connect with me. I'd love to chat. So one of the things that we always do when we first start out the show, I like to go over some of the unusual activity, or some of the options volume from the week. Like to pull out some of the tickers that were a little bit more heavy in volume. Talk about that, and then while we're doing that, we actually do have some people that have already put some tickers in the chat. We'll kind of work through that as well, and then the next section we'll get a little bit more depth. Actually, we'll kind of do a little bit of both as we're going some of this unusual activity. We will then sort of look at the flow, and we'll see where we could have saw like an entry signal, where we could have, used some information to our benefit in order to take a trade. And this is another thing that I want to say too. I always say this on the show. If you are not able to do the style of trading that you hear me talk about, listen, it's perfectly fine. Your trading system is going to work for you. My trading system is going to work for me. Don't try to force somebody else's system onto yours if you don't have the time, for example. Like I am in front of my screens all day long. I'm able to monitor positions. And so that gives me the ability to scalp or to quickly enter trades. And if you don't have that luxury, then don't set yourself up to do that, because options can get pretty nasty then. So you don't want to do that. However, we do talk a little bit about, everything relating to options trading that you that you could take some tips home. So it's not going to be just specifically for scalping, specifically for swings. It's a little bit of everything. So somebody just asked, use the RSI. I do. So basically what I do when I am all right, so let me go over my strategy real quick and give you a little bit of an idea of how I'm entering trade. Okay. So if I am, let's say, for example, if I am scalping a contract, normally when I am, when I'm scalping, I am not so concerned with watching the flow and watching the uneven volume alerts. I am more so just concerned with what's going on the chart. And so I will use the RSI. But what I'm actually trying to do now is for many months, I was really big into an EMA crossover. If you're not familiar with what the EMA is, it's the exponential moving average. And that just means that it's a little quicker than the SMA, the simple moving average, or just the regular moving average. I used a moving average cross that I loved. It was my strategy for a very long time. And then I sort of got away from it, just went and kind of changed things up because that strategy sort of became, I just wasn't running with the market. And so I just things up a little bit, but I'm actually trying to get back into that now for my scalping and my day trading. I'm trying to use an EMA cross. So I use the RSI, which is on the top here of my chart, paired with two EMAs. Okay. So I am using two new EMAs. I am using the yellow line is the 5-day EMA, and then the blue line is the 13-day EMA. So I'm using a 5/13 EMA cross. Basically, let me just show you real quick what it means. So you could see right here on the screen. Let's take a look right here. There is the yellow line crossing up the blue line. Okay. That's the signal. That's what is called an EMA cross. And that is a signal for me, or at least one of my signals, that I am potentially entering this trade. So that's signal number one. Then if you go up to the top here, basically the RSI, I'm not really a big RSI, MACD, anything like that. Like I'm not really into those indicators. They're more so there for, so basically what it comes down to is volume, price action, support, and resistance are my three main things that I'm looking at when it comes to trading. Yeah, the EMA is there for a confirmation for me. Yeah, the RSI, I'm trying to tweak a little system to give me a third confirmation, really. But more importantly than any of those things, I'm just mainly watching price action. I'm watching support resistance, and I'm watching volume. That, in my opinion, is what is most important for trading. That you need to know right away. Somebody said Apple. You need to know right away what is, man, Apple looks fantastic on this chart. My goodness. The support and resistance volumes like that are more important than most of your indicators are going to be lagging. Okay. That's another thing that we have to remember too. And my conviction right now in this market, there are stocks are just kind of doing what they will. They're not really respecting indicators too much. More importantly, I think if you're a new trader, I think you need to turn off every single one of your indicators except for volume and learn to just read chart patterns, learn to read trend lines, learn to read volume shelves, things like that. Consume yourself with price action, and that's going to sustain you as a trader, because ultimately there is going to come a time where if you're using an EMA cross system, let's just say, for example, there's going to come a time where that system is going to start to fail and you're going to get bad signals. And even with paired up with something else, you could still get a bad entry signal. But what happens is you spend time on the weekends, you chart, you back test, you do all of the homework that you need to do. So then come Monday morning or Tuesday this coming week, you're ready to trade. You don't have to, sort of develop some sort of strategy right as soon as you sit down. So Apple on the daily here real quick, just to kind of give you an example of, let's say that I'm entering in Apple. Okay. Apple is one of my main tickers. I have a watch list of main plays, and I have a bunch of watch lists, but one of the lists is just my main plays, tickers that play all the time. Apple, of course, is one of those tickers that I'm pretty much constantly I'm pretty much constantly watching. With Apple, we would start with the daily. We would work through that. As you can see, I was kind of messing around with this a little bit earlier to get you a little bit of a basic trend line to see. But I mean, real quickly, if you're just sort of observing the chart from your, like let's example, if you are thinking about taking a position in Apple, the first thing you need to see is that it is clearly in a uptrend. It's got a nice channel that it's working through. Actually, let me do this. Got a nice channel that it's holding to. There is plenty of support. There is plenty of a volume shelf. Okay, so another thing too, I always like to let everybody know. The indicator on the right side of my screen here is called the volume profile visible range on TradingView. And basically what this tells you, it's volume by price. It is, yes, Apple did just break resistance. Actually, right here, it did. So it is finally breaking on to the other side of 150. I felt like for a very long time it tried and just couldn't sustain anything. And so, yeah, Apple is on the higher side of where we've been trying to get it to based upon the news that they're going to start producing cars. That news had been expected for a really long time. I don't think that was anything shocking. I think if you follow Apple as a company, you would expect them to be involved with that. So that's what kind of pushed them over these last couple of days. Was actually, I think it was yesterday, was the news that they sort of plan to mass produce cars. I think it was 2024. But Apple on the daily, again, it's clear if we're going just based upon technicals, it is clearly in an uptrend. It is well above an area of strong support. It is the other line, if you want to look on here real quick on my RSI, the RSI that the system that I'm trying to use, I've been messing with this middle band number. I am not so concerned with the upper and the lower on the RSI. I've basically picked a Randy, yes, just real quick to let you know, all of the videos that I've done were available on the Benzinga YouTube channel. You could actually just search technically options on YouTube and all of the videos will come up. So if you want to go over again after the show, where all of our episodes are on there. So the red line here on the RSI indicator, I'm at the number 55. Basically what I've read is anything above like 63 on the RSI is considered bullish. So I'm more concerned with that middle line than I am with playing bounces, basically overbought or oversold. I'm just not concerned with that. I'm more concerned of trend and what possibly is coming. So Apple, to answer your question, I am extremely bullish on Apple. I think just from a first off, the chart is giving me bullish indications. It now again, I mean, you could even just look, if you look right here on this mark, you could see that let me draw a line real quick. There is 3 little taps that it has now this this is its new resistance area. Okay. So to even break it down a little bit further, this is now your current channel on Apple. You can see there's pretty strong volume. The bars that are, the farther they are out, the stronger it is for support or resistance. Obviously, if the stock is above that volume, then that would be considered support. So there's a very strong area of support on the chart. Consistently strong volume. That's another thing that you want to see as you're evaluating a position, if you want to get into it or not. Is the stock, does the stock have volume? Obviously, volume is what is going to push the price, and you really don't want to get involved with a stock that doesn't have volume, because you're just going to be wasting, your time and your capital and things like that. It's always got consistent volume, and then again, for me, the RSI here is above 55, so this is typically giving me an entry signal almost all of the time. And you could see that the RSI is pretty accurate as far as when I would take an entry right here. Now you can see, if you look real closely, now at first I wouldn't take an entry on the daily. I would, if I'm if I'm taking a scalp position or things like that, I'd be on a much lower time frame. Chase says, what volume indicator is that at the bottom of the screen? So basically this is called TL enhanced volume. It is Trade Lion. I don't know if you guys have ever heard of them. They're a social media account. They have a couple of indicators. They make one specifically for TradingView. Basically, the colors, it looks really cool. The colors are just showing me abnormal volume. And then the labels are giving me those numbers specifically of what the abnormal volume actually is. It looks fancy and it looks like there's a lot of stuff going on, but basically what it's doing is it's just to get my attention on specific areas of volume. And then I pair that up with the volume indicator on the other side. Are you concerned when the RSI goes above 80? So that's the thing. We could pull up, some ticker and work through them and stuff like that. And you could see stocks that are at like 91, 92 on the RSI, and they're still cooking. Now, at that point, are you entering in a position? I don't think you should. I think when it's clearly that high of an uptrend, and if the RSI is confirming that's over 90, I don't think you should enter. For me, though, am I going to look at the RSI, see that it's above 80, and use that specifically as a reason not to enter? I would say no. I don't necessarily use the RSI to look at. Now, 80 and 20 are the typical levels, okay? If you're above 80 on the RSI, that's typically considered to be overbought. And generally what is going to happen is the stock's going to cool off, it's going to pull back. And so if it's above 80, you normally will wait for a pullback to enter the stock because it doesn't make much sense to buy when it's been running that high. If it's below 20, then that means that typically it has really cooled off, and that's a good sign to enter. What I've done, though, is I've sort of split the middle, okay? My entry is the middle line of the RSI, the 55. I am trying to get when it's trending above that or when it's just breaking through that, that's my entry signal. I am using that as a confirmation, not as like my main indicator in order to say, should I enter or not? Okay. It's paired with the EMA. Again, like I have indicators and I use them. However, if I'm involved in a scalp or a day trade, my main focus, I'm using those as confirmation and everything like that. But my main focus is, let's just say I'm on the 10-minute chart, for example. My main focus is going to be, okay, so am I at an area of support or resistance? Am I above a volume shelf? Am I, are we in a channel and I'm going to be, right here again, there's an area that Apple bounced off a couple times. I don't want to enter into a scalp when Apple is having a tough time getting through a certain level. What I would do is I would set an alert at that level. And then if Apple does, if it does come through, then that's a signal for me to enter. But when I'm scalping and I'm trying to get in, on a contract to flip, and again, this is just within the day, I'm not so concerned with my indicators. Again, they're there. I see them and it'll give me a confirmation really quickly. But again, my focus is on my support and resistance lines. My focus is on my volume. My focus is on, other things like that. So I'm primarily concerned with, the RSI or anything like that. Do you buy puts or just calls? I do, a little bit of both. I do play, puts and calls, but like, for example, okay, let me pull this up here. So this is one of my indicator, or one of my screens that I use a lot. I'm going to flip over to this. Excuse me. Basically, this is the unusual whales overview for the entire flow of today's options sales. Okay. With Unusual Whales, I use Unusual Whales and Benzinga Pro as my two main platforms for everything when it comes to news and options flow and alerts and stuff like that. But what I am doing here is, so just to give you a little bit of example, if you're familiar with what Unusual Whales looks like, this is the overall flow. And again, this is just what, like I said, This is basically level 2 of options trading. This is going to show you every single options trade that comes through the books. However, with my strategies and things like that, I have everything turned off right now. There's certain contracts that I don't even want to see. So I've got a bunch of filters set up. I'm ignoring indices. I'm ignoring low volume. I'm ignoring really high premiums. I'm not concerned about any of that stuff. I want to see orders that are going to give me an entry signal. So on the main flow page, if you click on show charts, basically what this is, it's an overview of calls, puts. It's an overview of bearish, bullish. It's an overview of basically how today went from a market direction strategy. Okay. So the volume was, was a little closer than normal. Call volume was 57%. Put volume was 42%. The number of calls, it was 61%, clearly calls, 38% for puts, and then the ask versus the bid. Now you have to remember ask and bid. Okay. When you are entering in, you're buying the ask. And if you're selling, you're offering the bid. So we want to see, like, to consider a bullish market, we want to see a very high ask side. And then what we really want to see is when you get a little bit more in depth with reading the tape and things like that, you want to see above ask. When option traders are there's a term called sweep. When they're coming in and they're buying up a lot of contracts, if you see above ask, that is extremely good. That is a huge indicator for you to enter into a trade. Basically, when somebody does above ask, they are buying those contracts more than what the premium was. And why would you do that? You're probably wondering. You do that because you know something and you want to get in before everybody else does, and you miss out on a chance to get on the contract. They will do what's called a above ask, and they'll buy thousands of contracts. You want to pay attention to that. That's another good area, or that's another good indicator. And then there's just other, you basically will see here by the expiration date, the volume was primarily focused in on next Friday, the 8th. No, that's not right. The 8th is Wednesday. Okay, so immediately what you would see right here is these were focusing in on contracts that have weeklies. Those would be SPY, triple Q. There was a ton of volume for that, giving you an overall breakdown of strike and things like that. But I show you this to say that the direction of the market today was bullish. That's what you want to be on the right side. Again, you don't want to be, obviously when you're playing, specific tickers and things like that, each situation is different, but you want to be on the right side of where everybody else is going. And so very clear the market was trending bullish today. There was a lot less volume because it was a Friday first off, and it was also a holiday weekend. So naturally there's going to be a little less volume than normal, but the trend of the market overall was bullish. And so let's drop a couple. Actually, I already had let me catch up on a couple questions. I already had a couple of tickers that I wanted to look at. How do you compare RSI across different time frames? I really don't. Again, I know that sounds weird, but like I was saying, I'm only using it in. So basically what I'll do when if I'm entering a swing, it's a different story. I'm focusing in on my support and resistance levels and things like that. And I'll go through a couple different time frames. I'll start with the daily, and then I'll go to the 2 hour, 1 hour, 30 minute, 10 minute, 5 minute is kind of how I work my way down. And I look at the RSI on those. However, I don't care about the RSI on like 5 minutes. I don't care about the RSI on the 1 hour or anything like that. It's giving me an indication though, overall, of what Doc has been doing. So that's how I basically compare. Somebody said, what's my win percentage with this strategy? This new strategy is literally brand new as of 2 days ago. My overall win percentage for the year is like 60%. Evidently I'm doing something right, because this is what I do. So I could, I have a journal where I keep track of all my trades and things like that. I don't have August yet, so up until July I was at just about 60%. All that matters is your winners are more than your losers, percentages and things like that are important. Absolutely, they give you an understanding of how you're doing as an options trader. But your goal is just make more on winners than you lose on losers. Basically, you can be under, again, I always say this, and if you've watched the show for a while, this is like my motto. I'm not concerned about hitting home runs. I am only trying to get a base. Hall of Fame baseball players, they bat 300. 3 out of 10 times they're on base. That's what I'm trying to do. I'm trying to accumulate small little profits multiple times a day, trying to get on base, get my chance and opportunity. And every once in a while, I'm going to connect and I'm going to hit a home run. So as long as your winners are more than your losers, that's what the important thing is. Do you buy options with short expiry date or with long? I do both, okay? And so basically what I do here is when I'm scalping options, I am primarily focused on that week. Or if they don't have weeklies, then I'm focused on the closest expiration. All of the big tickers, though, have weeklies: Apple, SPY, QQQ, Tesla, NEO, things like that. Those all have weeklies. So that gives you the opportunity to basically, options have the third Friday of every month is the monthly expiration. And then most, but not all tickers have weekly expiration. SPY and QQQ, they have 3. They actually do Monday, Wednesday, Friday. And then the other big cap name, they have weekly Fridays, they expire. When I am scalping, I am playing that weekly expiration. And then when I am swing trading, I am primarily trading farther out. So I play a little bit of both. However, the bulk of my trading is done on short-term expirations. That's why I said earlier on the show, listen, if this doesn't work for your strategy, don't try to force it on there, because I do not recommend playing weekly contracts. They you know, if you have to really know what you're doing when you're getting into a weekly contract. They're moving quick. You are a newer options trader. Focus on nothing less than 20 days out. Go look at the expirations and go look at things that are at least 20 days out. Don't go anything less than that. How do you know if they are selling the call? Basically, as you are reading through the tape, you can see that right here, for example, a buy call is bullish. Very simple. A sell call is bearish. That's what you have to remember. Selling a put is bullish. Selling a call is bearish. So that determine if they are buying or selling. What time frames am I using when I am scalping? So primarily the 5-minute and the 10-minute. Those are my entries. I was on the 3-minute for a while, but changed back to the 5. I really like the 10-minute. That's just a real clean chart. I like the looks of it. Now this is, again, back testing and things like that. I hate the 1-minute. I just absolutely hate the 1-minute chart. I think it's just too noisy, and you get caught in a lot of false signals and things like that. Don't look at the 1-minute. Don't look at the 3-minute either. I think 5-minute is really the lowest that you should be looking at. How am I deciding targets and stops on weeklies? I will answer that backwards. I don't have stops because I'm monitoring my position. When I'm on a sell, I'm right there on position. I'm not, it's not like without adult supervision. I'm right on top of it. Okay. So I am entering and exiting mainly. My target is either a percentage that I've already got in my head, which is typically to 30%, or if I am in a trade where I've got a solid support or resistance, that's what I'm using as my targets or my stop. If I know there's an area where there's huge resistance, I know that it's going to have tough time breaking through there. So if we get to that point and then all of a sudden it pulls back, that's my target. That's my signal to leave. You mentioned buying above ask. Do you ever sell below bid to guarantee sell before sell off? You meant buying above ask. Do you ever sell below bid? So are you basically, are you saying that, like, if I need to get out of a position really quickly, do I kind of put a limit in, guarantee me a fill? If I'm in a position where I've got to get out right now, I'm just market ordering. I'm just sending it out there and whatever I can get out at, because you can see the spread right there. Now, obviously, you don't want to do a market order when there's like a 10 or a 15 cent spread, because that's a big loss right away. But listen, I'm not trying to do these little pennies and pennies here. If I get out of position right away, I'm just throwing a market order in, and that's going to get me out as quickly as I need to. Swing trading options. Do you usually go within the money or out of the money? I usually go wherever the volume that got me to that ticker in the first place is. And let me explain. So basically with a swing trade, that's where my flow and volume alerts and things like that come into play. So basically, for example, let's go back to what was one of the tickers that had a ton of volume. Also, this is bar chart. This is where I do all of my after hours research and stuff like that. Let's look at this. What's this CCJ? Let's look at CCJ real quick, because this was a very high volume. And this one would have been, yeah, okay. So this is one of the ones that had a very large amount of volume. So CCJ, let me pull it back up on the flow here. But then what I do basically, so for example, I would have received an alert that Apple had they did have over 300K. That's right. I would have received alerts that one of these contracts had an unusual volume spike. And it's this one right here. It's the, holy crap. No, that one did it, because the open interest was 99,000. Hold on a second. Let me go back here and get the exact contract. I'm sorry. The 12/17/21. Okay. So I would have received an alert on CCJ that there was a volume sweep spike, something unusual going on. Unusual volume on contract are these two numbers right here. Volume compared to interest. Volume is active as of today. Open interest is prior day. You guys remember that? So when a stock gets alerted for a unusual volume alert, it's because the volume is really exceeding previous days of interest. So CCJ, let's look at this. Let's go here. We'll go to this is my favorite tab on unusual whales, the intraday analysis. This shows me very quickly what's going on with this ticker, and it gets me the information that I need very fast. I spent a lot of time right here. Biggest options trades. This shows me the whales. This shows me the big boys. Okay. What it also kind of shows too is you can go into here, and then if you click on show charts, you get another overview of what's going on with this. So this is what I would also do. This is another step if I'm trying to take an entry on a stock. This is the overall breakdown for all of the trades of CCJ. You can see that it is primarily, okay, it's actually bearish. It's a lot of the volume and things like that, but look over here, the premiums, the money went to bearish. Okay. You can actually see here too that 12/17. Okay. So that 12/17 was the strike that alerted us in the first place. It was bearish. So was the 10/15, and the 9/17 was really close. The big volume strike prices, the 20 was bearish, the 25 was bearish. So you can kind of see, just by looking at this flow breakdown, you can see what direction most of the money was going. Okay. Now you might be asking yourself, all right, so what does this premium mean as opposed to volume and stuff like that? Basically, it just kind of comes down to, are you following the big whales? Are you following the people that have more information than what you and I do? Or are you going to follow just volume exclusively? And so the volume of overall calls and puts was 93% calls. Okay. So that is a big signal. Again, but you have to see the premium for the whales was bearish. So that then tells me, all right, what's going on? Are they trying to send us a false signal? So then I'll go back over to here, and I'll go to the intraday analysis page, and I lost my place. Sorry. I'll go back to the intraday analysis page and I will look at the overall options trades and get a little bit of an idea where the money was being sent. And you can see here that 1, 2, 3, 4, 5, 6 of the biggest trades were bearish, 5 or 4 were bullish. So it wasn't a huge difference when you kind of look at the contracts and things like that. You can see if you want to go a little bit further. Again, somebody spent $3 million selling calls, but then there also was somebody that spent $2 million buying calls, the different strike prices and things like that. So now I've got a little bit of an idea in my head, okay, what direction the stock is heading, where the volume going, where's the money going, things like that. So then what I'll do is I will take a look at, I'll take a look at the chart. And you can clearly see there was, look at this bounce. This is beautiful right here. This bounce off that support line right there. It's actually been really close to that range before. That right there, this happening, okay, is a clear indication of an entry signal for you. Now, it doesn't necessarily always mean that you're going to get this big of a move. But however, when you see that clear of a bounce and then a reversal, you can pretty much guarantee that there's going to be some gas. And it also broke through, again, here is your, here's your previous resistance. So it broke through that as well. And then the other thing you look at too is the RSI is just, what is the RSI at? It's above 80. So all of these things, you kind of, I would go down to my lower time frame chart. This would be where I would view if I am thinking about taking a position or not. I would use the 10 minutes. So I've determined all of those things. I've looked at the overall flow. I've looked at the direction. I've looked at volume. I also look at the most active chains because this, is another indication of like, where is everybody going? And where is the direction of the money flowing into? And again, you see really easily call. So that's confirming to me all of these signals that we're talking about. All right. The chart, the volume, the active tickers and things like that. All of these things put together are telling me that this is an entry signal for me to go long on a call. Now, with something like this, am I going to scalp this? Probably. I don't really know what caused this big spike in volume. But you can also see too the was there any? Yeah, here was an alert. So another thing that you will see on the Unusual Whales page is you can go on and you can look at the whale alerts. These are the really unusual alerts. There's something like that is, these ones are separate than the flow. Okay, so these ones are coming on their own. These are large orders, typically based upon premium price and volume. But what you can do here is then if you see a ticker that you want to get into, you can filter your whale alerts down, and then you can start to go through and see. There were, yesterday was actually when they started buying up this stock. The first order was the 1217, the $23 call. There was 18,000 contracts purchased for a premium of there's what I was looking for, the IV. Okay. The IV is the percentage of the chance of the stock spiking high or low. So I want to also look at that as well. I want to see, is this thing going to really go against me quickly? The IV, yes, the IV is very high. That's going to tell me that I'm entering into a scalp. The reason why I brought up the IV percentage. I am looking at that number, and if that number is low, typically the Apples, typically the Facebooks, Microsoft, things like that, their IV is lower. Because those stocks don't really have huge moves, again, up or down. The IV percentage can show you either direction. It's not exclusively showing you what the chances are of this stock breaking out. It also is telling you what chance this stock has of going the other direction. So for a stock that has a lower, let's say 60, 50, 70%, that's normally a swing for me. And I do scalp those contracts as well. But if it's let's say it's a new ticker, it's something that I'm not familiar with, and the IV is lower, that's going to show me a swing, because on the higher IV percentages, I'm playing those as scalps because I'm trying to capture a movement really quickly. And a high IV percentage gives me the chance to do that. So all of those things, again, that we were just talking about, those are all the things that go into deciding if, am I entering into a position? Again, and a lot of this is just looking at data, is going through, like, for example, today. Okay. So let's say, for example, if you were trying to enter into CCJ today, you would have received this whale alert for, again, the 1217s. So that's where everybody is going in that direction, that the 1217, something's going on in 1217. And again, it doesn't necessarily mean that like the day before or the week before or something like that. That's just where most of the volume and most of the money is going towards, is that 1217. So then you can even go a step further and start to investigate, like, do they have earnings coming up? Is there an event that they're waiting on? Is there, like, sometimes like you're waiting on an FDA approval? I saw somebody was just asking about AQST, but is there some sort of a catalyst that's going to cause this stock to move around that date? If there is, then that can also be factored into the decision if you are wanting to enter or not. Obviously, with this stock, people are expecting something to happen near that 1217 date, because that's where all the volume, and there was huge orders. Again, this one right here, there was 35,000. Like, that's a very, very large amount of movement on a ticker of CCJ that is not necessarily one of the more popular tickers. All of these things are giving me an overall indication that there's money flowing in that. I would enter into a swing. I would probably, just based upon these volume alerts alone, I would, now again, I've posted this on Twitter, and I've posted this on, that's another good question, Ed. And that's another thing that you have to factor in too. As you are developing, if you are trying to develop a strategy of using the options flow and the whale alerts and things like that, you have to remember that they could be hedging positions and things like that. So again, that as you're entering something, if it's overwhelmingly one direction or the other, bullish or bearish, you have to keep that in mind too. You also have to keep in mind too, and I know this is going to sound funny because we just started talking about this for a while, like volume signals and whale alerts and the flow and stuff like that. That's not in and of itself a buy or a sell indication alone. It's not. Just because you receive one of these alerts does not give you an automatic entry signal. And in fact, it sometimes is like step number. Well, normally CCJ was going kind of parabolic. Would you let it cool a bit before entering? So what I would have done, let's just go back to the daily real quick. We would have, so basically this was Wednesday's candle. This right here, this line was the previous area of the previous area of resistance. This candle broke through that. That is an entry signal for me. Okay, so if, let's say, for example, this would have been on my radar somehow, if I have seen the alert come through, or if I were to watch on the flow, or something that would have triggered me to see this stock, I did not see it. This is the first I ever looked at it. As I'm charting and as I'm doing my level and stuff like that, I see this candle breaking through a previous resistance area, and you could see this little volume shelf right here. That's the area. There's some meat right there that it's got to go through. And the fact that it did that now gives me indication something, there's a real chance that this is going to break to the upside. You can see confirmation that it did that. So would I let it cool off a bit before entering? Not necessarily. Now, if I am trying to get in on a swing position that's way far out, again, what's really going to be the determining factor on this stock specifically. If I'm placing myself in front of this trade and I am going through step by step, if I would enter this trade, the first thing that I would have saw would have been the volume. That amount of volume, and then looking at the chart would have told me that this is an entry for me. With it being that far out, with the premium being what the let's look at this. The premium on the 1217, and you can see where the volume is. The contract prices are so low that wait till Tuesday. Okay, everybody make a note of this, and on Tuesday look at CCJs. First off, look at their IV percentage, and then look at the prices of the contracts. I think this thing's gonna really spike. But you can see, like, for example, the $24 had such a high increase, but this $31 strike, the stock right now is at 21.53. The $31 strike had 78,000 contracts today, and the premium was 53 cents. Those two things by themselves, I'm probably just entering this because my risk reward setup is it's only 53 bucks. I'm also seeing 78,000 other contracts. I'm also seeing around this date here 30,000, 35,000, 9,000, 16,000. Like, there's a lot of movement in this specific area. That's mainly what's going to get me into this stock in the first place. I'm not going to wait for a pullback. Now, again, and I keep saying, like, but if I were to, like, let's say, for example, I saw that there was this huge area of resistance coming up. Would I enter that far out expiration call as this stock is hitting a resistance area? I would not. I would set an alert, and then if it breaks through that area, that is now my entry signal for me. But we can see all of these things are aligning, and the overall, again, I'm confirming through the flow. I'm confirming through my alerts. I'm also going to look real quickly here just to kind of get a quick overview of individual. You can see calls, like everything that's going on with this stock tells me that they are, and I say they meaning people that know more than us, market makers, whales, whatever you want to call them, they are expecting this stock to have a spike. And so with it being $21 right now, and a lot of the volume heading towards $25 and $30 and stuff like that, there's a good chance that we see this stock have some running. Okay. I would go into Benzinga Pro as well, and I would start to just look at the overall individual orders. I use this layout. I just like the way that it looks. It's a little bit more appealing to my eye. This shows me I can very easily sort by size. I can see the really big orders. And again, here's another thing too. A lot of the orders were for 917. So some of the bigger volume orders, like this one right here, if you go by total trade price, the one that spent the most money was this 917. They spent $600,000 on contracts for the 15 hours. So that's an in the money call. That's a deep in the money call. So that also then tells me that somebody is very, very confident that this stock's not pulling back. So I see that also as another entry signal. I confirm, through that way that this is an entry signal. I've confirmed that I'm outside of my area of resistance. I confirm that I am, all my other things, and it's overwhelmingly telling me that, yeah, I should enter. And, again, now we're in an area that we've broken previous highs. I don't even know what now at one point this stock was, look at this, $55. And right now it's at 21. So, I mean, there's a chance that the stock really it's got the high is 56 what was that, 56.14. That's its all-time high. So, again, the range, yeah, I mean, you could make the argument that this stock is bullish. Okay. So, and I know that we've done a lot, and you're probably thinking, oh my gosh, like every single order, like this is how you, but this is, again, like I said in the beginning, I wanted to be clear about it. This is my strategy. Again, I'm not doing this on a scalp. Okay. I'm not doing all of this work if I'm scalping a contract. I'm seeing, I'm looking at other, obviously I'm still looking at the chart. You have to look at the chart. I'm more focused on other things. So this situation that I just walked you through, and this is another, and I appreciate you saying this, midterm might be neutral. Basically, everybody is saying really closely for the next 14 days, they expect this stock to be bullish. Then there's probably a little period where it either trades sideways or might even pull back a little bit. But then come October, maybe into November, they're banking on this stock being bullish again. So that then is part of your strategy as well. So if you enter into a contract and bullish short-term, bullish long-term, that period in the middle, are you going to be able to sustain just letting that contract sit? Are you going to be able to sustain a contract pulling back, losing profits, things like that? If you can't, that's fine. Don't automatically, don't just write that contract off because you're being real with yourself and saying, no, you don't want to, I don't want to witness that either. I don't want to, if I know short-term that a stock's bullish, I'm out short-term. I'm not going to go through, because again, you have to remember, once you're getting farther out, once your contract is closer to expiration, and if the stock is, after you've done your forecasting and stuff like that, if you kind of see midterm, it might trade sideways, it might even pull back a little bit. Now you're bringing in your theta decay. Your contract is losing value because you're getting closer to the expiration. Plus the stock is pulling back. So these things are starting to fight against the contract. I don't even want to get to that point. Okay. I don't even want to get to the point to where I'm having to concern myself with all of that stuff. It's very clear indication right now that the short term on this stock is bullish. That gives me a setup for either a short term buying the 917 calls or going into December and buying some of those calls. But again, my play on this is I'm factoring all of those things in. Okay. And like I said, for a scalp, I'm not being concerned with that. I primarily scalp the same stocks all the time. I have a watch list where I follow a bunch of tickers, and they're a part of our list that we monitor all the time. Over the weekends, we already are doing our homework for support and resistance levels. We already know that if it breaks through on the upside to this number, that's an entry for a put or a call, I'm sorry. And if it drops below a certain number, that's an entry to go on a put. We already know that in advance, okay? So most of my work, if I'm entering scalp, swing, day trade, whatever you want to call it, most of my work is already done on the weekends, okay? I am not necessarily, and we'll wrap up with this, because a lot of people, when they get an options flow service, they think that all you have to do is just wherever the most volume is going, buy that contract. And there is, and I always say this because I like to be honest, there's a time and a place for that. Okay. If I get, I use Sandal, for example, Sandal, SNDL. Sandal is a stock that trades in a, somebody spent $125 million on Tesla. That's unbelievable. It's just kind of fun to go through some of the volume, the unusual volume alerts, and see just the crazy amount. I mean, I look at this stuff all day, every day. I really like, this is my strategy. Do you have search filters for alerts and UW for scalps? Basically what I am, for a scalp through unusual whales, I have two screens open. I have the overall flow, and then I have my alerts section open, which are these are the more focused alerts. These are the bigger movers. Okay. So these whale alerts, I know already that if I get one of these alerts, that at least there is a chance of me entering a scalp on that position. Okay, so Peloton, the $90 put came through as an unusual alert. Again, that's going to get me in the mindset of, am I swinging this? Am I playing it for, a couple of days? What am I going to do? When I see that big of a volume alert, I know that there's opportunity for me to get in right away and scalp it. So that's what I'm doing in unusual whales for my scalps. I also am receiving other alerts and stuff like that. For scalping and things like that, I'm playing news alerts. I might play, there's all kinds of other things that are going on. I might just an alert that a stock broke out a previous resistance, and I want to get in and play it while it's going towards its next. That's also a scalp alert for me. Does implied volatility really matter? Do any of those numbers really matter? And I kind of say that jokingly. Yeah, I mean, I think to a certain extent, I'm not going to not enter a position. Well, let me rephrase that. I'm not entering a position based upon the IV alone. I like to know what the IV, but again, once you start playing a lot of the options, so many of the tickers are very similar as far as their deltas are the same, their IV is the same. Like you just start to know stuff about these tickers. Like Apple has a lower implied volatility. I scalp Apple all the time. There's stocks that I've scalped that have really low IVs. There's also, Sandal, for example. Sandal has an IV percentage of like 160 or something crazy. Again, with Sandal, like that's like one of those stocks that if I'm getting alert, and this is what I was saying before, now I remember. Sandal is an example of a stock that if I get an unusual volume alert, I immediately enter. Okay. And I'm going to end with this thought here. There are certain tickers that when you receive an unusual volume alert, there are certain tickers that I'm talking about me, and you can research this more. And if you want to adapt it as part of your strategy down the road, perfectly fine. I do not recommend using any unusual option service for buy or sell signals alone. I think it's part of your strategy, absolutely. But just seeing these things come across the screen and immediately buying, I do not recommend doing that. I do not recommend doing that. One more time, I do not recommend doing that. With that being said, there are times that I will receive an alert and I immediately buy that contract. Now you're probably thinking, well, why would you, like you just said, don't do that. Then you said you do. Okay. So there are certain stocks that I just know if I'm getting an alert, something's going on. Sandal is one of those. Okay. Sandal is algo traded. It trades in a range of like a few pennies per day. It's got a float of like 99 trillion. It moves like 3 cents on 150 million shares traded. Like it doesn't move. Like it's not you're not going to retire off Sandal. It's algo traded. It's computer traded. There's just not a lot to it. One day I got a volume alert on Sandal. I immediately bought that contract. Lo and behold, the next day, what happened? Sandal it was back when, we were early days of the memes, and I got in and it was like 2 or 3 cents, and at 2 or 3 cent premium, you can imagine how many contracts I bought the next day for like 13 cents. But again, that's a stock that I know right away that something's going on. If I get an alert on Apple, if I get an alert on Peloton or the CCJ or something like that, I don't like that's not enough conviction for me to just jump in on a contract. Because sometimes if you get this alert, sometimes if the volume alert, like that volume's coming right now. And as you guys know, like say for example, if you play, like pennies, or if you trade like small cap low floats and stuff like that, like if you don't get in at the right time, you missed it, and you might as well not even bother with it. So there's certain times that tick comes through, and this is just all of like my system. This is all just being involved. Like this is all just like crafting how I trade options. I see an alert and I just know right away. And again, that's not even a guarantee either. It could go against me. But again, I'm not going to let it go again. You know what I mean? Like at that point, it's like, man, listen, the risk outweighs. Like there's so much upside to getting an alert like that. Chances of it being correct. Most times they are. Monthly options, what delta value do you normally consider? So that's the thing. Normally I'm going to get at least 50. But again, if a delta is like, it depends on what contract, it depends on what the contract is. If I can get really far, let's say, for example, I'm playing a really far out of the money call that is a swing trade that had a ton of volume go into it, and the delta is really low. Well, basically what I'm going to do at that point is I'm going to buy so many contracts that my delta is now going to be worth it. So when/if we actually do get that spike, I can capture that movement. All right. I can capture, again, because the last thing you want to do is do all this work and put all of your capital into a contract only for it to move a very small amount. And so, with deltas, I like to be at 50. If you are naturally at the money or in the money, delta is okay. The only time that I really focus in on getting a good delta is when I'm buying a ton of these out of the money calls. And primarily I'm trading like at the money, like 2 steps down or in the money. I don't really trade a lot of out of the monies. We play, out of the money calls as autos, or like, for example, this CCJ, if I would have taken a volume alert as an entry signal, those are out of the money. I would have bought a bunch of contracts because I want to maximize my profit potential. But again, I also want to capture a movement. So you would buy a lot of contracts. You'd want to get your delta as high as possible. So on a monthly, let's just say, for example, if you're just buying one to swing, I wouldn't do anything lower than 35, maybe 40. Again, as you increase delta, I think what's more important for you personally as a trader is not necessarily that delta number, but it's how are you going to maximize capital that you have in order to get the most reward back. And so with monthly options, the delta is going to increase the farther you go in the money, but also the premium is going to increase the farther you go money too. So that's where you have to balance out. That's what's more important, I think. Instead of focusing on the delta, you want to make sure that you're maximizing your capital. You want to make sure that you're, obviously you're buying a contract that fits your strategy and things like that. But you also want to make sure that the delta is there at least. You don't want to play a contract that's got like a 10 or like a 3, or like some of these contracts are so out of the money. It's just throwing your money away. Then now again, we play lotters, we call them, and sometimes those things hit, and that's fine. But you have to understand, like, when you're going into a trade like that, you have to understand like what you're getting yourself into. And then how do you hedge call options when it is downtrending? I'm cutting. I'm just cutting. I'm like my strategy. I'll buy back in later. If I have a call position that's going against me and I'm far out from expiration, I cut the loss. I'm not holding through. I'll cut loss all day long and I'll get back in later on. I'm not holding through just because I want to hold till December. That's just not part of my strategy. Again, if you want to hedge, play puts. Just do the opposite side of that. So, all right, we're going to stop there. It's 10 after. I'm going to wrap up. So it's going to take me a couple of minutes to wrap up. So real quickly, we always talk about a lot on the shows and things like that. So let me just kind of go over the same things we go over every single week. I'm going to drop my website in the chat. If you are interested in learning more, Javon, I think you asked a question about my hedging strategies. If you want to personally, because we are at time, if you want to personally message me about this, we'll talk more about that. Tradinggrounds.live is my website. It's my social media accounts and things like that. That's where you can find me. Feel free to message me and ask me questions. And if you are interested in learning more about options trading, I am available to help you. I love to teach. We will work together. We have we have a great community of people that I work with through a Discord channel. You're welcome to join us there. Everything we do is all free. We don't charge for alerts. Don't even do alerts, to be honest, because my goal when I'm like mentoring somebody, or if I'm teaching one-on-one, my goal is not to say to you, okay, buy this at this signal or exit this signal. My goal is to get you to know that stuff automatically so you can do the work, on your own. So everything is free. We're a very welcoming community. Again, we just simply want to see you succeed as a trader. So again, tradinggrounds.live is my website. I am here every Friday night at 5 p.m. Eastern. We are live on Benzinga every single week. And then during market hours, I am in Discord. Feel free to join the channel. We'd love for you to come trade with us. We have a lot of people that trade together on a daily basis. And let's just go together. Let's learn about trading. Let's become better traders. And let's work hard. So with that, everybody have a Baron's here. He's just done. Speaking of somebody that I trade with consistently, Baron has become a friend through social media. My other buddy Ryan was here too as well. A bunch of guys that I trade with on a consistent basis. You can mean the world to me. All of the support, everybody that tunes in to this show, I just greatly appreciate the support. We are live every Friday night at 5 p.m. Eastern time. Again, all the episodes are recorded, so you can go back through the channel and you can start watching all of them, from beginning. Yeah, let's end that. Thank you, Josh. Smash the like button, folks. It really helps us out. It's our content out there. And listen, again, we're just trying to help people become better traders. That's all that we're trying to do. My goal is for somebody to say to me one day, like, hey, listen, man, I'm ready to go out on my own. I've grown and I'm ready to trade on my own. Like that's the goal, is to get you to the point to where we're always going to be there. I'm always going to be there, help and stuff like that. But I want you to be, a trader. I want you to get it. So with that being said, don't forget Monday, no casino. Casino is closed on Monday. We will be back on Tuesday. Have a wonderful, wonderful Labor Day weekend. Stay safe. Enjoy your time with friends and family. And for those that watch here, we will be back next Friday. And if not, I will catch you guys throughout the week on Discord, on social media. Have a great weekend, guys. Catch you on the next one. See ya.